If you've seen the news lately, you've probably noticed that mortgage interest rates are continuing to increase. I'm getting a lot of questions from folks about this increase and what that means for us here in the Houston real estate market. So if you give me about 90 seconds, I want to explain in really simple terms what this means for you if you're thinking about selling your home, and also what that means if you're thinking about buying one. So we're going to use this simple graph here. This is a supply-demand curve. So as we move up on the curve, the prices increase. As we move to the right, that means the quantity sold increases. So the basic rule is, as homes sell for more money, more people are willing to put their home on the market. And this makes sense, because if I told you that your home would only sell for $1, you're probably just going to keep it. You're not even going to think about selling it. But if I told you could sell it for $10 million, you're going to ask me to put it on the market right away today so you can make that money. So as the price increases, more people are willing to put their home on the market to try to sell it. So these are our sellers. Now, the exact opposite is true for buyers. Buyers don't want to pay a high price. So for buyers, as prices are high, fewer people are willing to buy one. But as they go down, more buyers are willing to purchase. So high prices for buyers mean a very small number of them are willing to purchase something, but low prices mean more buyers are willing to buy. So when we have an increase in interest rates, what that does is that shifts this curve to the left a little bit. So we don't know the exact amount, and there's a lot of different factors going on in any economy like ours, but this curve will move a little bit to the left as interest rates go up. And what that means is, for prices, is we used to be able to sell our homes somewhere around here in this sweet spot. That's our equilibrium point, so to speak. But as our curve moves to the left, as we have a decrease in demand because fewer buyers are able to qualify to purchase those homes, we're going to see a new equilibrium point somewhere lower down this curve. And whereas you used to be able to sell your home for this amount of money, now you're only going to be able to sell your home for this much. So the difference between that is this loss in value. So what we're going to see is, as interest rates increase, expect to see some downward pressure from interest rates on the sales price of homes. So if you're a seller, what this means is you probably want to think about listing your home on the market as soon as possible. We're going to see continued mortgage interest rates increases, and we're going to see continued pressure on the sales price of your home. So now is a good time for you to sell at this higher point, as opposed to a few months from now or a few years from now. We're probably going to see higher interest rates, which means a lower sales price for homes. So if you're a buyer, it's not all good news, because you may be thinking, well, I'm going to get this great discounted price. But actually what this means is you're not going to be able to qualify to buy the home that you wanted to buy. So you may have a cheaper price, but it's going to be on a lesser home. So if you're a buyer, now's a good time for you still, with our relatively low interest rates, to buy something that you really love and it's going to be your dream home. And if you're a seller, now's the time for you to get your home on the market and sell it for the best possible price.